Good evening, everyone. Welcome to Officer 24/7. My name is Niharika Walia and I'm with you with the specific area of ABFM, Advanced Business and Financial Management. I hope I'm audible as well as clearly visible, everyone. Let's begin with the session. First of all, please share the session, like the session, and subscribe to the channel right away because this is our specific area for our. What am I going to discuss today is basically the portion of are accounting and financial management for bankers. अच्छा ठीक है. So when we talk about advanced business and financial management ABFM now, in the ABFM region we have around 25 chapters, and currently I'm talking about another chapter from our book, which is from the area startup finance. Everyone, look at this particular topic. The topic is venture capital. Everyone, here comes the topic of venture capital. There's a particular case study. Now, this case study talks about what? The case study says that many innovative startups are coming up there, right? They're talking about many innovative startups, especially those in technology, face significant challenge in securing traditional bank loans due to their lack of tangible assets and high risk business models. The solution is to go for venture capital. Venture capital is crucial for all these startups because it provides early stage companies with growth potential, often exchange equity rather than debt. But having a debt is definitely a troublesome thing. What's the problem with the debt? Debt and equity are two different areas. Debt is basically you take a loan and then you can pay it off accordingly. Right? When we talk about the specific area of the venture capital is what? Venture capital is basically these people are helping you in terms of your business, but obviously they are also looking forward to what will they get out of it, है ना? So they want to get something out of it, so that is what they'll be looking forward to as well. So, when we talk about this area, what do you have? Key benefits of venture capital is capital infusion. Capital infusion is provides the necessary financial resources to fuel growth and scale operations. Matlab, you take the money from them. Expertise and mentorship, of course, these people provide a lot of mentorship as well. है ना? In terms of the mentorship, they are providing not only financial aids but also the other way around as well. So they basically they take care of almost everything in terms of these businesses. They're really helpful in this case. Right? Acha, next pointer. The next point that comes here is that exit opportunities. Acha, once that particular organization has earned enough, what will you do? Once this organization has started earning enough, you'll be like, okay, now I think we can move on to the money from somewhere else. If you can move from somewhere else in terms of your money, what will you do, everyone? In this case, simple that thing that you can do is basically you will exit at that point of time when you feel it's all done. That's a simple rule, है ना? Okay, so there comes the first question based upon this. What is the primary difference between venture capital and traditional bank lending? Okay, traditional bank lending is basically getting the money from what? Getting the money from getting the specific money from different areas. Like, see, I can get the money from an NBFC or a bank. When I go for a banking area, these people would be asking me, okay, you want loan, then you have to give something as a collateral, है ना? This is what you give now, everyone. Now, when we talk about this specific area of traditional banking, where you have to give some security. In case of venture capital, you just have to give away your equity. That is way more costly, I would say. But still, you give the equity to develop yourself, and ultimately, that particular person is also guiding spirit for you as well. Now, so technically, it hurts the business a bit because your business is basically shared with someone else. But in this case, you still get an edge. कि ठीक है ना? Even if right now you couldn't get it, later on you will definitely get the benefits. है ना? So VC provide loans with while bank provides equity. No, it's actually the other way around. VC provides equity. VC provides long-term investments while prioritize the short-term. No, there's nothing of that sort. Then comes the next part. VC firm invests in high risk, high reward ventures, while banks provide low and stable. नहीं, banks provide loans to anybody who can pay it off. है ना? While VC are ready to take up more adventures as well. That's the difference between the two. So VCs are regulated by the Federal Reserve, while banking are regulated by Securities and Exchange Commission. SEC is basically the particular organization which is linked with regulatory bodies of USA. This has nothing to do with India there. So when we talk about venture capital, the rule simply says that the answer is the one which basically goes is C. It goes little better. We can say this, because venture capital is adventurous. They will say, "Arey, high risk is fine, high reward is also fine." But the banks will have a problem. They will always go for, "I want lesser risk and I want stable business." They will help the stable businesses to grow, but the big businesses are basically a problem to them. कि ठीक है ना, how will basically you cannot give loans to someone who is very adventurous. That's a simple rule. Okay. Next point. Why do venture capital firms often prefer to invest in early stage businesses? Why would people do this, everyone? Why do venture capital firms often prefer to invest in early stage businesses? Actually, there's a benefit in early stage businesses that I normally look at. Early stage businesses will make sure that these businesses, once they grow, the venture capital will have good amount of money, otherwise they will not get good money. Now, of course, if this, the organization is already very big, then it is difficult to buy. For example, let me give you a good example there. Google bought YouTube for hardly, I think, in some 1.6 billion. Okay, so now they generate money for more than this amount every year from YouTube. So think about it now. When you're buying an organization at an early stage, you get it in pennies and then you can grow it way further, and that will be helping you further as well. है ना? Then early stage companies are less risky. Early stage companies have proven track record. They do not have a track record of success. This is happening for the first time, I would say. Early stage businesses often have the highest potential. This is what I can say. They have higher potential. Okay, Instagram and Facebook is now under Meta, and they also bought WhatsApp. What was the reason for buying WhatsApp? WhatsApp is one particular app everybody is having. है ना? When you are having this situation that WhatsApp could be bought and they could grow further, it is definitely something. It was way better. They bought it for pennies and they are now generating good amount of funds out of it, isn't it? So in this case, answer is C. Early stage companies are less likely to be acquired by the competitors, and this is actually also a benefit point, but I think C goes better. D is basically when the organizations, when you buy it at lower price, it's gonna help you a lot in terms of your growth. What is the primary risk for the venture capital firm, everyone? That was a part of case study, huh? Everyone? The startup may fail to achieve its growth targets. This can happen. The startup may be acquired by a competitor. The startup may not pay dividends to the shareholders. That's not an issue. Even if it is not able to pay the dividends, if later on it can grow further, I don't think everybody will be having a problem. The startup may default in its loan payments. Nah, that cannot be the issue as well. So I would say this is wrong. I would say this is also wrong. But this is also wrong as well. What can happen is, even if you pay a good amount of money to that, sometimes this cannot happen. Na? So startup may actually fail to achieve its growth. It might be looking at a situation ki it might get something, but in this case it will not get anything. That's why I'm marking the answers here as well. The answer in this case was C. The answer in this case was C again. Nope. Many questions of C. Okay. C here and C here and then A here. Everyone, moving on to the next question. How do venture capital firms typically generate returns on their investments, everyone? How do they generate their investments, the returns basically? Everyone, how do they generate their funds? Okay. By charging interest from the capital investment, this is not going to give them a good amount of money. By receiving regular good dividend payments from the startups, nahi. By selling their equity stake in startup through a merger, acquisition or IPO, or by providing consulting service to the startups. So ऐसे ना देखिए, venture capital is basically a vulture which tries to guide the other organization till the time they don't feel it has a great potential. You will help the other organization, of course, but only up to a level when you feel it is not going to benefit you. The difference between angel investor and venture capital is what? If venture capital sees ki acha, I can generate something out of it, he'll run after it and buy that organization. While when we talk about our favorite, the angel investor would be like, I'll help you out and then I'm going. But same thing will not happen in this case now. That's one particular clarity about it. ठीक है. अच्छा चलिए, let's talk about typically generate returns on the investments. How do they get the money? They normally get the money from that particular business. Once the business starts growing, they will generate their funds as well. So technically what you do is you get the money from there regularly, but also by selling their equity stake in startup. I bought the equity startup, say for maybe 5 cr. Then the organization became very popular and it has been growing like anything. After certain time, what will happen, everyone? After certain time, that particular organization will grow to that limit कि ठीक है, it becomes a 100 cr company, say. So in this case, if you sell away your equity stake, though you should not when you are having a good amount of money from that particular business, so that equity stake through the merger, matlab you sell your part once you're done with that particular business कि ठीक है ना, I don't want to invest anymore. So then what will you do? You will give it to someone else for merger, or maybe what will you do is basically you will acquire the other organization which is going to be your competitor, eliminate that, and then you can relax. And the last part is your IPO. What do you do? Nika did this, huh? Nika is basically an organization which was involved in providing cosmetics and all, which was not Indian, not only Indian basically. It started with the working of the other organizations as well, na? For example, South Korea, Korean brands of cosmetics was something that they made available to the people. So when this thing happened, what is it? Once they became so big, they went for IPO. They went for IPO with Zomato and Paytm there. Paytm basically came first, and then Nika also came around the same time. Not the exact same, but similar. At that point of time, pata hai what happened? Nika became successful, and these organizations, Paytm and Zomato, I think at that point of time was also trying to get over their hand over shares. So ultimately, none of them worked out. Nika worked very well. The reason was this organization had a unique idea, and that unique idea gave them a particular area where they became, they had the first mover advantage. Tira and now Amazon and every other brand has also started giving all those things, but exclusively at that point of time only they come up with it. है ना? Done. Chaliye. Now look at this question. Which of the following best describes a venture capitalist's role in the companies they invest in? Passive shareholder with minimum involvement? No. They are active people. They participate because they really want that organization to grow, and if it grows and if it benefits them, then what the hell? Ultimately, if you're generating your funds from this particular area, your growth is going to be something that you look forward to. You know, the passive part is not their main part. Once the organization starts growing, they will take benefit out of it. Provides funding and actively leads the company. Yeah, this can happen. They provide them money and they also basically guide them in their working. Then comes provides debt and holds controlling stake. if they provide a debt, I think everyone, if you can have a debt and they will be looking forward towards controlling part, why don't you go to a bank there? If your business has a stable mind and stable ideas and there is a backup of money already in terms of guarantees, then I don't think venture capital would be a better option, because these vultures can definitely eat up your business once they get a hand over your organization, है ना? So provides funds with no active involvement. They provide active involvement. That is how they know na कि this particular organization has benefits. Once I put money in terms of equity there, after a few years when this organization becomes big, I can just sell off a part of it and I can gain funds, है ना? For example, the one who the people who were part of the initial Amazon, I think one of them who was a part of it, he sold his part in that very beginning area, in the beginning era. He sold it for $800. Everyone, if he would have kept all that share he got, he would have been playing in crores and crores. In terms of the US level, I think I would say it would have been millions and millions. है ना? So basically, it is all about what do you do with the funds. If you use it in terms of equity, is it better, or if you use it as a debt or anything else? So it was always better to have your own funds generated in the market and then you leave it on the market itself, na? Right? Moving on to the next question, everyone. The answer is B. They provide the funding, everyone. This part is definitely wrong. This is also wrong and this is also wrong. The right part is B. It provides funding and actively leads the organization. It is supposed to do that. Otherwise, what's the fun of actually becoming a venture capitalist, everyone? Isn't it? Anyhow, let's move on to the next point. Oh. The third round of the venture capital financing, often known as mezzanine financing, is provided to the company for what purpose? Basically, I think in this particular area, your answer is visible already. But koi baat nahi. Let's talk about the question first. What do you mean by mezzanine financing? You know about this particular area, everyone? What do you mean by the term mezzanine financing? पता है mezzanine मतलब a particular financing area which is related to the area of if you make an error. The day you make an error, they will then convert that debt into equity. मतलब you will no longer be a debt person. You will get a stake over that organization. But if they're making a payment, then you do not get that part. So probably people pray कि ठीक है ना, that particular organization actually makes a default and they can get a benefit out of it. Simple, है ना? So in this case, what happens is you are doing this for expansion after the success. So basically, in terms of mezzanine financing, it is a pure debt till the time you make no default. The day you make a default, this particular thing will be converted into equity. Done, everyone? चलिए, now let's move on to the next question as well. What is one of the primary sources for the beginning of a transaction in terms of VC or venture capital, everyone? Everybody? What is that one primary source for beginning a transaction in terms of venture capital? See, where do you get the money? Public advertisement, government grants, referral system through business contacts or online applications. When you talk about VC, it is only through one thing. It is through referral systems. मतलब someone is interested and someone is not. That part is definitely there. Okay? So basically, referral systems in through business contacts they develop this area. Done, everybody? चलिए जी. Now moving on to the next question. In the venture capital screening process, मतलब basically when these people are looking forward to providing funding to someone, they will always look at that particular organization. Which of the following factors is typically considered least critical when deciding the viability of a project? Geographical location, the company's operational structure, potential for high investments, or size of the requested investment. When you are screening, when you are looking at that particular area and thinking, "Ki, acha, what should I do about it?" What do you do in this case, everyone? Simple. You look forward towards company's operational structure. One of the particular thing that is required, but at the same time, geographical location plays a very important role. Company's operational structure is not very important because the rest of the things are very much important. What is more important, everyone? The first and foremost is geographical location. Your geographical location is super important. Second part is your company's operational structure, not very important. Third is potential for high return on investments. Okay. If you think that they can make a lot of money, then only you will do this. And the last is size of the requested investment. Yeah, your investment is low, small, or minimum, then you can definitely give money to them. Otherwise, if it is bigger and very difficult to look forward to, then it's a different scenario altogether, ना? है ना? चलिए जी. Which of the following statements above about post investment activities in VC is most accurate? Venture capitalists maintain a completely passive role after funding is provided. They actively engage in business oversight to increase the value of their investment. They usually avoid providing strategic advice to prevent conflicts with management, and venture capitalists exit immediately after the initial investment is secured. No, sometimes they become greedy as well. They're like, "Acha, this organization is making good money. Let's hold on to this organization so that we can at least grow." है ना? So last point is something which doesn't really satisfy me in this case. Venture capitalists maintain a passive role. They have to maintain an active role. Why would they give money to someone if they don't want to be involved with them? So they basically actively engage in it. So the answer is B, everyone. In this case, the answer is B. Okay? Okay, so let's end the particular session here. But before I end the session, everybody, I hope you already know our courses are available. And pata hai, our crash courses are going on. This is what you can do. Go on to the area of www.adda247.com. Go on to the area of JAIIB and CAIIB. Okay? On our website, there is www.adda247.com. You go on to the specific area, and then there it is. In this area, you have got your JAIIB. There is it, your CAIIB. In your CAIIB area, if you plan to give the examination in the upcoming future, go ahead and use the topic of CAIIB Mahapack 2.0. In this Mahapack, you get everything at a very limited price. Now our revision batches are also there. This is our revision batch and this is our crash course. All these things are available for you. If you're planning to buy our revision batch, then what you need to do is just go ahead and click on there of buy now. Then don't forget to use the code Y541 and apply it. The moment you apply this, see, you are getting 81% off. 80% here, 1% extra on our website. It is available on our app. It is available. So please go ahead and check out. And everyone, okay. Thank you so much for being there. Good night. Take care. We'll be meeting in the next session.